Good evening, everyone. Welcome to another video tutorial. In this video, I will be taking you through my thought process on what my expectations is going to be like for this new week. And it's important I state here that this is going to be a follow-up detail to my previous analysis on this instrument. And talking about follow-ups here, last week trading session was a little bit choppy, but we were able to make some profit on the US oil as we had some buy moment and at the same time had some selling moments during the later part of the week. And for the sake of this video, I would like to share with you some key moments that we had during the course of last week before we dive into the current market structure. Now, on the during the course of last week trading session, at the beginning of the week, we had this beautiful flat channel between the $79.50 level and the $79 area after witnessing a huge bearish gap at the beginning of the week. And one thing we were looking out for is to see either a breakout or breakdown of this channel to give us a trading opportunity for the week. And following this first publication here, I also buttress the fact that we have been witnessing some buy pressure around the $79 level, and we might likely be looking out for buying opportunity. So, as a result of this, I was able to identify a key structure around the $79.10 level where I said we shall be triggering a buy position. And this was exactly what happened here. Price action triggered our buy position at the breakout of the $79.10 level, added another position at the $79.50 area. But one interesting thing that happened was that as soon as price got into the $80 level, we begin to see some selling pressure around that area. And thank goodness, we were able to secure the current buy position by moving our stop loss accordingly to protect that position. So we had some selling pressure come in, which take us out of the second position. And then we also had another opportunity to add one more position at the site of buying pressure. And price action moved significantly well for some time as we saw the breakout of the $80 level, and that was on the 13th of this month. Then another breakout of the $80.50 level happened, which I shared with you here, where I said a breakout of that level will definitely will welcome in another position. So we saw the breakout of structure. Price action moved significantly well with about 80 pips in our direction before this huge bearish momentum happened. And on Tuesday here, we saw the sell momentum that pushed price to the downside. But I wasn't keen enough to join the sell momentum considering the fact that we just had the breakout of both the $79.50 level. Remember, that was the resistance point at the beginning of the week, and then another breakout of that very important key level we identified at the $80 level. So I said, we are hoping to see another buy pressure come in again to incite another wave of bullish momentum. But that did not happen. It took quite a while before we saw this volatility that happened during the CPI event for last week. And it was at this point that we saw this volatility here and the inability of price action to break out of the $80 level. Remember, the $80 level has been a strong selling niche in this market. I will be talking about that when we scale into the chart. But at this point, we realize how strong the $80 level has been for selling pressure, and we decided that if price action continue to trade below the structure here, we'll definitely be looking out for selling opportunity below the structure. And we had a position set at the $79 level, and price action broke down to $79 level, triggered our sell position, and you saw price action came back again to do a retest of the $79 level. So we saw some selling pressure again resume in this market. And the key movement didn't come until I think on the 16th, I guess, when we saw the final breakdown of the $78 level, which pushed price to the downside. And it was at this point we continued to join that sell momentum to the downside. And as a result of this, we saw a situation where price closed below the $76.60 level, to further emphasize the strength of the sellers at this point. If you want to have a detailed look into how we took advantage of this trade, I will be dropping the link to this video in the comment section of this current one. And if you are watching from my YouTube channel, you will definitely be seeing the link to this commentary at the top right hand side of your screen. So with that being said here, I will be diving right into the current structure. And since this is going to be a follow-up detail to my previous analysis, I don't want this video to be long, so I will be diving right into the current structure here. And if you do want to have a detailed explanation to how we got to this current structure, I would advise you to watch my previous analysis on this commodity. So now going into the new week here, this is where I'm going to be laying much emphasis on. And one thing we should take note here is the fact that the $80 level has continued to be a strong selling niche here in the last 3 to 4 months. And as a result of this, I'm of the opinion that we shall be looking out for selling opportunities here as long as price remain below the $80 area. And if we look at what has been happening here in the last 3 to 4 weeks, we can see that despite the breakout of this bearish trend line, which we identified in my previous video, where we said we were looking out for bullish momentum at the breakout of that structure. And one thing we saw here was that as soon as price got into the $82.50 level here, we begin to see selling pressure around that area, which pushed price further to the downside. Breaking down the $78 level, price action came back to do a retest of structure to further emphasize the strength of the sellers at this point. Now, if we take into consideration this bearish impulsive leg to the downside here, the bullish momentum we observed right above the $73.50 level could likely be a retracement phase which tested the $80 level, probably to incite another wave of bearish momentum. So we're really at a critical point in the market at this point. So we need to understand what is really going on around this area in order for us to be able to take advantage of a trading opportunity. So the first look at this, it look more bearish as long as price remains below the $80 level, taking into consideration this impulsive move, a retracement into the $80 level, how we might likely see a situation where price will do a sell-off to the downside. However, there is another structure around here which we also need to take into consideration while trying to make a decision here, and that is the bearish trend line here. As you can see, though, this was the lowest point price had ever been throughout the course of last year, and that is the $70 level. And one thing we notice here is that if we connect the series of higher lows here, we have this bullish trend line figured out. And look at what happened here around the $73.50 level. And also we saw what happened here a couple of weeks ago as we saw another buy pressure here. So we can see that they are around the $73.50 level, coupled with this bullish trend line here, is a beautiful sign that buyers are trying as much as possible to break out of this current structure that we are in right now. And at this point in time, looking at the sudden pressure around the $80 level, it's more or less a dilemma at this point where a selling opportunity could come in, and at the same time, we could be having a buy opportunity at this area. So taking into consideration this bullish move to the upside here, I will be more comfortable if I see a breakout of this $80 level, taking out all the sell positions there, probably followed with a bullish momentum right above the $80 level on our lower time frame, which will definitely be giving me an opportunity to buy. But as long as price remain below the structure, I want to see how price action will be reacting with this bullish trend line here during the early hours of the week to decide what my next line of action will be. And if this leads into the breakdown of the trend line here, it will be a beautiful signal that we might be going bearish one more time during this week. And taking into consideration the importance of that bullish trend line here, you will see that it also shares a confluence with that $75.50 and $76 area, which has been a strong demand zone at least in the last 4 months. So if price action does break down the structure, it will be a beautiful bearish signal. And at the sign of selling pressure below this level on our lower time frame, we would have no choice but to join another wave of bearish momentum, probably with a TP target sitting around the $70 level. Now, with this information we have gathered here on the daily time frame, let's scale down into the 4 hours time frame where I was able to identify a simple setup here that we can use to position ourselves in such a way that we can catch any trading opportunity this week. Now, if you look at the 4 hours time frame here, it is very obvious that price action has been bearish. And another thing that we should also take into consideration is the fact that since the month of November, price action had been caught within a flat channel where the resistance point sits around the $82.50 level and the support level of that channel sits around the $73 area. And price action has actually been consolidating within this area to further emphasize the indecision that has gripped this market. And in fact, it's a long one, which has lasted over 3 to 4 months now. Now, if we zoom into what has been happening here since the beginning of this month of February, and like I said on the daily time frame, that is taking into consideration this impulsive move to the downside and seeing this as a retracement. Look at what has happened around this below the $80 level since on the 9th of February. You can see that we have something here, a structure here that looks more like a reversal pattern where the $78 level is serving as the neckline of that structure. And if you take a closer look at what happened during the later part of last week's trading session, we saw the breakdown of that neckline area at the $78 level to give us a signal of a possible bearish move. And price action dropping back into the $76 area, I'm of the opinion that we might likely see price do a retest of the $78 level with a sight of selling pressure below the structure to incite another wave of bearish momentum. So I want to be taking this also into consideration while thinking of a trading opportunity on this one. However, if this buy pressure continues in such a way that it breaks above the $78 level, I think I'll be very patient here to wait out for a further breakout of the $80 level to give me an opportunity to join a trend continuation to the upside. So these are my views here on the US oil. So we shall be looking forward to see how participants in this market will be reacting to this current structure around this area during the early hours of the new week to decide what our next line of action will be. And be rest assured that I will be jumping in the comment section during the early hours of the new week after noticing or monitoring how participants in the market will be reacting to this level to give you an insight into what my expectations will be. I hope this video has been of immense help in making your personal decision on the US oil for this week, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you can be part of my daily commentaries as I normally share commentaries in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday as we get prepared for the new week. Do have a wonderful evening. Bye bye.